So the next problem is also about relevant costing. So here we have to again find out what's the relevant costing here. The required is prepare calculations showing the total relevant cost for making a decision about the contract in respect of the following cost elements. Okay. So we have to find out what's the relevant cost for material K and L, and what is the for skilled labor. So only two elements are here. So you can just follow the cursor and read. So first one, this product is like regularly used by the company. So if we are going to use this product in our contract or in the current contract, then we have to replenish it. So the price can be the current purchase price. So let's follow. So there is already 2000 kgs of material. The same material is in the warehouse. So that has a cost of 19,600. But we should not take this cost as it is a book value or historical cost. So since then the price of K has increased by 5%. So we will find out the relevant costing for material K. So material K is required, 3000 kgs is required, and even though there is already 2000 kg in the godown, okay, we can split it as in the godown. We have to still purchase around 1000 kg. So we can say it is 1000 kg. Okay, current purchase price. Okay, because this is new purchase, we have to freshly buy 1000 kgs. So that will have a price of what's the price? The price, I think the price we have to find out. Okay, so price per kg of K. So we'll work out here itself. So we have bought already, and that price is 19,600 divided by 2000. So this is the price. So we can't take this as the price because it is increasing by 5. So increased new price. I think we can put it as new price for K will be 9.8 plus it is going to increase by 5%. So 5%. So I think rather putting it as 5%, we put like this into 1.05. Okay, I think that will work well. So this is the new price. So the new price is 10.29, and this is a fresh purchase but already in stock. Okay, so regularly used. So again, if it's going to be regularly used, that will also have the current purchase price. So already in stock is 2000 kgs. So the price will be, so this is the value of material K. So we'll move on to, we'll leave some two lines gap and we'll go to the next one. The contract also requires 200 kg of material L. So we have material L. (200 kgs). There are 250 kgs of material L in inventory which are not required for normal production. So it is either scrap. This material originally cost 3125. So this is like useless because it is historical value or book value. If not used in on this contract, the inventory would be sold at 11 per kg. Okay, so that is the scrap value. So we are taking scrap value. So the scrap value is, why do we take scrap value? Because scrap value provides us the opportunity. We could have sold it as scrap, but we couldn't. So that is around 200 kg into 11 per kg. So material L will have a value of this much. Okay, so next one is, so material L is over. We can move on to labor. So labor, he says, the contract requires 800 hours of skilled labor. Skilled labor is paid 9.5. There is a shortage of skilled labor and all the available labor is fully employed. Okay, as they are fully employed, either we have to get people from outside or we have to use them from an existing work in the company in the manufacture of product P. The following information relates to product P. So okay, they are engaged in the production of a product called as product P. So that product has 100 as selling price and skilled labor is 38 and other variable cost is 22. So 40 is the contribution. Okay, so 40 is the contribution and the contribution is usually lost. Okay, if the by producing this product for this contract, okay, if we are unable to use them to produce product P, we lose some money. So opportunity cost of not producing P, okay, per hour. So if you see 40 is the contribution. Okay, so 40 is the contribution and okay, and how many hours of labor it takes, so that we need to know. So if you want, we can put it like this. We'll put it like one step below. We should divide contribution divided, okay, contribution per unit divided by labor hour per unit. So that's a formula. So we'll work it out here. So we don't know what is the labor hour per unit, so we have to work out that separately. Okay, so this is the formula. So to find out this, we will divide it into two parts. One is contribution per unit and the other one is labor hours per unit. Okay, so this is like 40, but what about this? Labor hours per unit, we will calculate it here. See, labor cost is 38, right? It's 38 we are paying. So each hour it is 9.5. So how many hours they are taking? They are taking 4 hours. Okay, so the opportunity cost of labor is 40 divided by 4. So that will give you 10. So each hour the contribution, the opportunity cost of not producing P per hour is 10. Okay, so additionally, okay, this is 10, but additionally we should also add the variable cost. Okay, so we can put that here. So 10 is opportunity cost, and 9.5 is the variable cost of production. So I think we'll put it here, 9.5. And how many hours are required? 800 hours is required. So the total would be like this. So we have done almost all the elements here. I think we'll take this to, okay, so we'll find out relevant cost of order okay, it's 48670. So that's about the sum. It's a 5-mark sum, but still it is a little bit lengthy kind of a sum. So we'll move on to the next one. So this question is like quite lengthy, but also like very interesting. It is a December 2011 question which is asked in ACCA. So if we solve it slowly and little by little, we will get the answer. So we'll start from the required. So if you see, required itself is somewhere long down. Okay, but this is the most comprehensive sum in relevant costing. Okay, so we'll start from here. Prepare a cost statement using relevant costing principles showing the minimum cost that TCO should charge for the contract. So it's a one-off contract. You should charge the least amount. Make detailed notes showing how each cost has been arrived at, and explaining why each of the cost above has been included or excluded from your cost statement. So whether you have like included a cost or you have excluded cost, you have to give a reason. Okay. Explain the relevant costing principles used in part A and explain the implications of a minimum price that has been calculated in relation to the final price agreed with Pushco. So you have to substantiate why you have used what is the implication of this price. Okay, what does this price refer to or mean? That's what he's asking. So we'll have the similar kind of notes itself here. So we'll have particulars. So before particulars, we'll first increase the font size. Okay, so we'll start. So you can just read along the cursor. So the company has two business. One is installing telephone systems for the first time or replacement, and the second one is it is a service where they are giving that connection for the telephone system and they are charging for the annual like maintenance cost or something. Okay, so this is a one-time expense, but this is a recurring income. So this is like one-time income. This is a recurring income. Okay. So next we'll see. So why are they low? So why is this company so keen in getting this order? Is they are a potential customer and they're also a large one. Okay, this even though this particular order is not a large one, they feel that this will lead to a lot of future business in terms of replacing the installations or like for the service contracts. Okay, so there are like more additional income once this order has been captured. So getting this order is like very important. So the price that is quoted for this order should be as low as possible. Okay, so that's what concept is. So this is an ideal sum. This is an ideal sum to be for relevant costing. So we'll start from here. So first one of the company salesmen has already visited Pushco to give them a demonstration of the new system together with a complimentary lunch, the cost of which is $400. So is it like relevant or not? So number one, we can take it as lunch cost. Lunch cost is not relevant. Why? It is a sunk cost. Okay, it's already incurred. Next, the installation is expected to take 1 week's time. Okay, 1 week to complete and would require 3 engineers, each of whom is paid a monthly salary of 4,000. Okay, so they are like full-time employees, I think, and they are paid a 4,000. So this is not a relevant cost. Okay, because any other way they are like paid. Engineers have just had their annually renewable contract renewed with TCO. So again irrelevant. One of the 3 engineers has a spare capacity to complete the work, but the other 2 would have to be moved from contract X. So out of 3 people, one is like free. He has spare capacity, we can use him. The other 2 don't have spare capacity. We have to move them from some other contract. So we are losing income there. Okay. So contract X generates $5 per engineer hour. There are no other engineers available to continue with contract X. If these 2 engineers are taken off the job, so these guys have to definitely do it, and every hour they spend, they will earn an income of $5 for the company. Okay, it would mean that TCO would miss this contract X. If these 2 engineers are taken off the job, it would mean that TCO would miss its contractual completion deadline on contract by 1 week. Okay, so if they are taken from that job and they are put in here, we'll miss the deadline by 1 week. Okay, because of this, what will happen is we have to pay a one-off penalty of $500. Okay, so since there is no other work scheduled for these engineers in 1 week's time, it will not be a problem for them to complete X at this point. So what's the concept here? See, this job will take 1 week time, right? We have to miss the other contract. Only if we miss that other contract by 1 week, we can do this contract in that 1 week time. Thereafter, after 1 week, these guys are free. So we can move these guys to that work. So what is the relevant cost here is, the relevant cost is not 4,000 because it's a fixed salary. It's not for this contract. For anyway, they have to pay it. So 5 contribution per hour they have put, but number of hours they are not given. Even if they have given, it is not much useful. Okay, because we can either way pay the penalty. Okay, so they have not said how many hours. Only when they tell how many hours, we should think in other terms. So they have not given any hours and all. So the best thing is we can pay the penalty. Okay, so we can put it as engineer salary. So that will be a penalty we can pay and use them. So this is a incremental cost. Okay, we have to pay it additionally. That's about the second one. Let's go to the third one. So third one is TCO's technical advisor would also need to dedicate 8 hours of his time to the job. Okay, he is working at full capacity, so he would have to work overtime in order to do this order. Okay, so he is a full-time salaried employed, but so that we should not consider, because either way he will work for us. But to work on this order he has to work overtime. Okay, and he is paid an hourly rate of 40 and is paid for all overtime at 50% above his usual rate. So how many hours he's working? So here we have a guy called as technical advisor, and we have to pay him for 8 hours. We pay him 40, but he has to be paid at a premium, which is 1.5. So we can take that number, we can put it here. See, this is also an incremental cost. Okay, so 2 visits would need to be made by the site inspector to approve the completed work. He is an independent contractor who is not employed by TCO. Okay, so he is not an employee of us, so we have to pay him separately, and charges Pushco directly for the work. His cost is 200 for each visit made. Now the fourth one is, it's called a site inspector. So site inspector amount would be 0. The reason is he will charge Pushco directly. Okay, so charge is made to the client by the inspector. Okay, so we don't need to, it's not our cost. So we'll go to the fifth one. Fifth one is, TCO's system trainer would need to spend 1 day at Pushco delivering training. He is paid a monthly salary. Again, he's a monthly salary guy, so there is no additional cost. But also receives 125 for each day spent delivering training at a client side. So we have to pay him, not for this particular order. Okay, we have to pay him 125, because that is a 1 day training charge we have to pay him. So he's a trainer and we have to pay him the 1 day charge. Okay, so again it's an incremental cost. Okay, so 5 is over, we'll go to 6. So we'll just copy this and we'll move it above. Okay, so we'll go to, I think we were in 5, 6. Okay, 6 is here. 124 handsets would need to be supplied to Pushco. Okay, so the next item is handsets. And it says 120 is required. The current cost of these is 18.2. Okay, if you want to buy it, it is 18.2 now. Although the company already has 80 in its inventory, that's great. These were bought at a price of 16.8. This is useless. Okay, we don't want historical or book value. The handsets are the most popular model on the market and frequently requested by T's customer. That means it's a frequently or repeatedly moving item. Okay, so 120 units have to be split into 2 parts here. One is 80 into 16.8, which is from the warehouse we can take. The balance 40 we have to freshly purchase. So stock repurchase, okay, at market price. Okay, the other one is The other one would be, okay, it's fresh purchase. So it would be new purchase. New purchase, again, new purchase has to be in the market price. Okay, so that's about the handsets. Let's go to the next one. 7 is Pushco would also need a computerized control system called as Swipe 2. The current market price of Swipe 2 is 10,008. Okay, 10,800. So they have to buy a computer's control system which is 10,800 currently. An older version of it is available which is called a Swipe 1. Okay, it's already in inventory and this could be modified at a cost of 4,600. So Tico has paid 5,400 for Swipe 1. So this is irrelevant. We don't want old historical prices and all. When it was ordered in error 2 months ago and has no other use for it. So it is either, it's actually scrap. The current market price of Swipe 1 is 5,450. Again, that is useless. We are not going to, it's already in stock. Why are we going to buy this useless thing? So it is unnecessary. Although, if Tico try to sell the one they have, it would be deemed to be used and therefore will have only 3,000. So the concept is this. We have a control system. This control system, if you buy new, okay, new purchase, it would be, I think we'll put it here. No, not here. I think we'll put it here. I think that would be better. New purchase would be made at 10,800, or you can buy, you can use this old model. Okay, so Swipe 1, Swipe 1's, you could have sold it as scrap. So scrap value would have been 4,000. You could have got this amount. So this is the opportunity cost. Okay, this is opportunity cost 4,000 plus you have to modify cost. Okay, modify cost. So modify cost is 4,600. So put together, it is total cost would be 8,600. So which will you use? Okay, the concept is which one will be used. Okay, so we can use whichever is less. So whichever is less is 8,600 is the less one. So we can use that. Okay, this one or this one, whichever is less, we have to use it. Okay, so that's about 7. We still have 2 more. I think we have 8. 8 is 1,000 meters of cable would be required to wire up the system. The cable is frequently used by Tico. So it is again, it's frequently purchased one. It has 200 meters in inventory at a cost of 1.2. Historical cost is useless. The current market price of it is 1.3. So it is something, I think, which is similar to this. It is very similar to this. Okay, so it is cable which is already in stock is 200, which has a current purchase price of 1.3, and the balance is 800 meters which we have to purchase. So put together, this is the value that will come. So we got the 8th one. We'll go to 9. So 9 is, you should assume that there are 4 weeks in each month and that the standard working week is 40 hours long. Okay, so I think now he has given us the concept for the point number 2. Okay, the point number 2, he has given the data now. So point number 2, I think we'll work out here. So work working note for engineer salary. Okay, engineer salary. So opportunity lost by not attending. Okay, should we take it? That's a question here. So see, we don't need to take do this working. The reason is, even though they are losing $5 per hour per engineer hour, and both of them, so there are two people losing $5 per hour, and how many hours this will take? This will take 2 weeks. I think it tells 2 weeks of time it will take. Okay, so should we calculate this? The answer is no, because we are not losing this contribution. Okay, so we can say that. Okay, we can put it like this. Engineer salary opportunity is not lost as paying penalty ensures that the same product, sorry, it's contract X can be done a week later. Okay, so this is a note, and this note is regarding point number 2. Okay, so you can take this as a note. Engineer salary, so the opportunity is not lost, because we are not losing that order. We will next week can work out that order, because we have paid the penalty. Okay, so up to 8 points is over. Anything else is, I think 9 was there. I think that's it. So the sum is over. So we can finally get the total relevant cost for the order. So that would be so that would be 13021. So I think we have made small mistake. So the mistake is, handsets should be priced in current market price. So current market price is 18.2. So that should be 18.2. And also the current swipe cost, okay, I think it is here. So if you see here, the scrap value of that swipe one machine is 3000. So I think I put it as 4000. That is another wrong thing. So this will become 7600, and this will also be 7600. Okay, so this is the right answer. So sorry for the small mistakes. So that's about the concept here. Hope you got the idea. So the sum is over. He's asking you, what does the minimum price represent? Okay, see, the minimum price represents a one-off price. We cannot charge anything lower than this 12,189, and this is only for this order. For even if the time is going to be delayed, or after a 1 week or after 1 month and all, this value will not be the same. It will keep changing. Okay, because as the purchase price will change, other costs will change, so this also will change. So this is a minimum price that we have to charge for the current quotation during within a short span of time. Okay, within a short span of time we have to charge this. If the minimum contract is going to take a little bit longer time, we can't be this cost will not be the same. It can change. Okay, and two, this cost cannot be offered on a regular basis, because this is the least price, that least cost it is. So this cannot be the normal charge. In order to attract our customer, we are giving the lowest charge. So this cannot be given as a regular thing. Okay, so that's about the concept here. Hope you guys got a good idea, and that's about the relevant costing also here. And we'll meet in a next chapter video. Thank you.